What a wild roller coaster of real estate we have experienced in the past 3 years. Today, I'm going to review with you my market of the city of Surrey, using stats kindly provided by the good people at the Fraser Valley Real Estate Board. This is the first video in a 4-video series, this one in particular highlighting the entire marketplace right now. And then the following 3 videos will break down my market in single family, townhomes, and condos. So if you are looking for some doom and gloom real estate topics, sorry to disappoint, this video is going to be nothing but the facts. But if you like numbers and charts and knowing what happened in the marketplace to help guide you through the current market, hopefully giving you a better idea of what's headed your way in the future, well then this series is for you. So please subscribe to stay up to date on the market. Click the like button to help get this info out to other people that are also interested in the Surrey real estate market. And know that if you are looking for help in my market of Surrey or the Fraser Valley, you can book a call with me right now using the link in the description below at a time that works best for you. And now on to the overall Surrey real estate market in its entirety. And to do that, we hop into, as I mentioned, the stats center from the Fraser Valley Real Estate Board. Now, what we're looking at here is the overall marketplace, including all asset classes since 2005 in benchmark pricing. But what I want to do is take a little look here and narrow it down within about the last year. And you can see, again, as I said, this is a wild roller coaster. Actually, let's go back out a little bit. Let's look at it over 3 years since the beginning of the big bad pandy. So the overall price point in January of 2020 was $706,000. When the pandy hit, it actually was increasing at that time and then leveled out a little bit. And then obviously with all the government spending and everything we've seen since then, mass immigration, all these different factors coming in, we saw the massive climb. Now, about a year and a half ago almost now, we're talking March 2022 is when the first interest rate increases came. And what do you know? We saw a drop from what was almost a doubling over the previous 2 years down from 1.25 back down to under $1 million. So the average asset across all asset classes was $990. And since then, we have skyrocketed back up another $100,000. So we're not quite back to the peak market according to this chart, but we're going to see how the other pricing comes into play. HPI is something that you have to be aware is a calculation. And it is a calculation based on the average type of home in that area. It is not average price. That is a different thing. Some people, however, do like to focus on median. Median is simply the middle number. You're going to notice this jumps around a lot more. So if you have 11 sales, whatever that 6th sale is in the hierarchy, that is median price. And you're going to see that it's obviously much more volatile and not super reflective of the marketplace because, well, it really depends on which particular homes sell at that time. But let's look at the peak. So the median in February of 2022, this actually says that the market peaked earlier, was $1,083,000. And then we saw it bottom out in February of this last year, way down at $779, and now we're back up to $912. But you will see right at the beginning of the summer here in June, the median price did come down slightly. However, we are now up 7% year over year across the entire marketplace. So nobody's suggesting that we are back to this crazy peak of the beginning of 2022 in either price point. But let's now look at average price point. Average, really simple calculation. Average out the number of sales and what they sell for, divide them by each other, and you get a very, very similar kind of rocky road up and down. Now, the average price point, here's why I don't like to use it. Again, it depends on if higher price property or lower price properties sold that month. But with things like interest rates increasing so quickly, obviously the lower priced assets are going to sell more. So that's another reason why average price can come down so sharply. However, average price is up 9.5% since this same time last year. And benchmark price is still down 5%. So if you are the people that like average or median price, you're suggesting that the market is better than it was this time last year, which I guess it kind of is. However, at this point in time, I don't think we've seen those recoveries. And a lot of those sales that happened in May and June, even after the peak, unfortunately, there were still some really, really high selling prices. So I don't think it's totally representative, and that's why I like to use benchmark. However, you're starting to see this kind of tail off of average price. You're seeing that same tail off of median price, but the HPI is predicting it. And this is something that I don't necessarily like about the HPI, but it does gather data from the past and then shows you more of a trend. And that's what this is showing. The trend is still showing upwards, even though the average price has turned back. But price is only one part of the marketplace. Let's look at the overall sales. Now, when we were at the peak of craziness in the pandemic, we saw massive amounts of sales happening. Obviously, that continued through it. There would have been way more sales happening in March of 2022 if there was more product available. And then sales obviously started to decrease quite rapidly to a low of only 270 sales in January 2023 of this year. Now, you have to remember, in our board area, there's 5,000 agents. There's another almost 20,000 in Vancouver. So you've got a ton of agents fighting for as little as 270 transactions. But that didn't last long, as it often does not do in this marketplace. And now we're seeing really, really high amount of transactions again this last June. However, I do expect that to tail off as we continue to go through the summer and things start to normalize slightly. Looking at the amount of new listings coming on, unfortunately, this has also gone backwards. It would be really, really good if we had a higher amount of new listings coming on each month, but it's already started to taper off, and that's not going to be a good thing for the overall marketplace long term. Good news, however, is active listings are still on the uptrend. So how can we have new listings going down, active listings going up? It means the consumption rate is not as high as it once was. So properties are staying on the market longer. 2,580 current active listings on the market as of when the stats came out. Well, let's go back and look at last June. We were at 3,300. So again, we're not nearly the amount of listings that we had on the market last year. And this is a broken record you're going to hear from all real estate agents. There's just not enough listings out there. I'm going to scale back out on this so you can see the maximum. We're down here at 2,500. Look at everything 2015 and before. The lows for the year in January and December were about 3,000. So we are only right now at 2,500. So again, we are at record lows. No matter what anybody likes to tell you, oh, there's no listing inventory shortage, anything like that. Trust me, historically, we are in really, really short supply. And obviously now we have a much bigger population, making it actually exacerbated. Sales to active ratio. Now, right below this, probably about the 33% line, that is a seller's market. So somewhere, let's see if I can find one right at 33%. There we go. October of 2020. Anything above this point on the chart means that prices are going to go up. Obviously, the higher this goes, the crazier the market gets. But just because this is, for instance, here in 2021, it doesn't show here that the prices are going down until it gets below about that mark at that point in time. So that's 27%. So April of 2022, we started to dip down. And then it's only when you actually get down into these, which is June, July of last year, below 20% that you start to see prices coming down. And it should be then no shock when we hit February and we started going over 20%. Things started to take off. And although we are in a spot right now where the market is kind of not that hot, it's still 33% consumption. So that means if 3 listings are on the market this month, one of them is going to sell. And that is a really, really hot market. We should definitely be one in about 4 or 5 in order to get to a much more balanced spot. This is probably the number one metric. I report on it here on the channel all the time, but it is something you need to watch. Now, if this plummets, it's a good time for buyers to jump into the marketplace and get some negotiation. But if it goes up, guess what, buyers, you are out of luck, and it's now going to favor the seller. Not a stat I like to report on lots because it's kind of silly, but percentage of original asking price. So this is when you come on the market, what do you end up selling for? Now, it is very common when you actually, let's go back again. We're going to go out to the max. It's extreme. I would say these are very common numbers. So let's go back to, I don't know, from 2010 all the way up to 2015. It was very common you would sell for between about 97% and about 95%. So you're negotiating a little bit off of the price. However, then we went through 2016, 2017, 18, and look at this. When you ended up in February of 2022, there were so few listings on the market that they were on average selling for 10% over the asking price. But let's narrow that down again back into the 3-year model. Now, that is not a healthy market to be in. And as the market then declines, so this line right here is asking price. So things are selling for what people are asking. That was still happening in May of last year after the interest rate increases started to come in. And then it bottomed in December of last year. So if you were looking for a deal in comparison to asking price, the time to buy was December of last year, because you were going to get, if you were lucky, an average of 6.1% off of the asking price. And now, believe it or not, we have exceeded that number. We actually exceeded 100% of asking on average again this last May. Price per square foot is a bit of a silly statistic. And the reason for that is, well, in the overall marketplace, it doesn't really matter because we're now comparing massive houses versus small condos. So I'm not going to focus on this. Obviously, you can see it's going back up again, but not something to focus on until we get to either the townhouses or the condos in this video series. So consider that. Days on market, though, super important. I'm going to use average here. Let's go back out again so you can see the average days on market. So days on market simply means of the listings that sell, how many days does it take those listings to sell? You can see back in the crash of 2008, we dropped down to 81 days. So of the average listings that sold, it took basically 3 months to get the average listing sold. And now we are down back to 19. Let's go back to the peak of the market. Again, a year ago, it was 15. So we're only taking on average about half a week longer right now to sell than we were at the peak of the marketplace. And that number is trending down very quickly. The real good spot for the marketplace to be is around that 35 to 40 day mark. So if we could get back over that, that would be good. I think for everybody, that gives you a little bit of consumer choice. So you can get out there and maybe not panic buy a particular property because they might be on the market for a couple of weeks rather than where they are right now at a couple of days. And again, this is the average. So usually with this graph, the hot properties are still selling in 5, 6, or 7 days on the market because they're holding offers. And then once you see a property, and this is an interesting stat if you're trying to negotiate a deal, if you look at a property and it is above the average days on market, that means the buyers are not seeing value. And those are the properties that you should likely be trying to negotiate on price and not the brand new ones coming to the market. So what this tells me right now in the marketplace is we are coming to a more normalized market. As I've been saying all year long, it looks like we are sitting in a okay, still hot, but not too hot summer marketplace. And the real question for me is, where do interest rates take us in the future? How do those cross-reference with incomes that are now going up? And obviously immigration becoming a serious factor here with the lack of new house starts. CMHC is talking all about that. House starts are down. But there is one thing I guess I should point out. Let me go back into this here real quick. The real estate market here, and this is my new favorite term to use, we are a yo-yo on an escalator. So we are continuing to go up, and sure, there are peaks and valleys along the way. However, even if you bought at the beginning of 2022, there's a really good chance that we may not fully recover that for still a few years. But I know in my neighborhood and a bunch of for instance, the investment property that I own right now, those properties are coming extremely close to peak values as they were about a year and a half ago. Make sure you come back to the channel to see this same video, but broken down into detached townhomes and condos, in case you are in one of those asset classes looking to either upsize, downsize, or maybe just get into the market. And hopefully this information can help you make a better decision moving forward. And remember that if you do need help in the marketplace and you don't know where to find it, well, you can book a call with me right now using the link in the description below. Thank you for subscribing, clicking the like button, and we'll see you in a couple of days.